Yo, what up everybody? Welcome back to another video. Arie here, and today we're going to be reacting to the craziest Wall Street bets trades that you've probably never heard about. Now, if you've never heard about Wall Street bets, it's a subreddit on Reddit where people post all of the most degenerate gains and losses that you'll probably ever see in the stock market. So, since we've been talking a lot about investing lately, I figured, you know what? Let's watch this video by Benjamin, who often makes videos about this kind of stuff, and yeah, his content quality is pretty incredible, so we're gonna take advantage of that, and we are gonna watch this together because this is gonna be pretty cool. Let's get into it.
This video was made in partnership with the Daily Upside, a free financial newsletter that offers insightful information instead of headlines that make you want to throw your phone against a wall. Visit the link in the description to learn more. I somehow made $110,000 this morning, and I'm not sure how. This wasn't even posted in Wall Street Bets either. This was posted in the options subreddit. It just shows the entire investing community is just Wall Street Bets degenerates wearing different faces. Tens of millions of them. Investing, trading, slot machines, it's all the same thing. What happened here? This is actually one of the craziest and luckiest trades I've ever seen. It's a little bit complicated, but I'm gonna try to break it down. So this guy sells 1,000 put credit spreads. He collects a $2,000 credit with $50,000 in collateral. His entire account. He basically makes $2,000 up front, but is risking $50,000 if the stock drops way below this price. If the stock closes above his short put strike, both legs of the spread expire worthless, and he keeps $2,000. In after-hours trading, the stock briefly drops between his long and short put. The put he sold is just barely in the money, and the put he bought as protection is just out of the money. Being that the puts he sold are now in the money, they get exercised by the buyer. To make this simple, he's now forced to buy $23 million worth of SPY shares, and the puts he bought to protect against this scenario expire before he can exercise them to cover these ones. What does that leave you with? A $50,000 account holding $23 million worth of SPY shares. Just to put that in perspective, $23 million worth of borrowed shares in a $50,000 account is 460 to 1 leverage. It literally can't go tits up. If SPY would have dropped 1% in the morning, he would have lost $230,000 from an initial $50,000 investment. Fortunately,
can you imagine
SPY
that?
opened green. By the time
That guy got so lucky, and this is the thing about Wall Street Bets that's so unbelievable. You'll see all these people doing these insane gambles like this, and you'd think that this is rare, but to be honest, this is probably 99% of traders out there. And it's funny nowadays how this is just part of the culture. Of course, that can lead to a lot of dangerous behavior, but at the same time, like, it's kind of funny and cool. So I don't know. I'm definitely for more retail investors just sending it, even if it does cost a lot of people a lot of money. But man, wow, what a complete luck of the draw right there, and it could have gotten so bad. That's so crazy.
Million worth of shares sold, the position was up over $110,000, leaving him with a healthy 200% return and absolutely no idea how he got there. Infinite leverage. There are so many great trades on the internet, like I could just sit around all day and look at them. Some of them have actual analysis and predictions to back them up. 99.5% of them are just absolute degenerate risk-taking that print cash or violently implode. Hundreds of thousands, millions of dollars from pressing a few buttons on a screen. Before, we went through the biggest, most violent losses. But you know what? I'm done quenching your animal thirst for blood. Check this out, another $4 million loss. Oh my god. $4 million evaporated in one day. This one is specifically awful.
That's so sad, bro.
We've joked about money evaporating with other losses before, but this is on a completely different level. XIV was basically an inverse fund that used futures to track the VIX, the Market Volatility Index. If you look at the VIX, you can see that volatility over the long term tends to revert back to a low point. It spiked during 2008, spiked during Corona, has some smaller spikes here and there, but generally tends to fall over time. Because XIV inversed the VIX, you could buy it and effectively bet that volatility will go down. Seems like risk-free money, right? Over a long enough term, it seems like volatility will always go down. This idea was the basis for different traders and funds inversing the volatility index. Billions and billions of dollars poured into these funds as they returned 3 to 10% per month.
Oh my
temporarily.
God, bro.
Then basically one day the market sold off like 5%, causing the VIX to shoot up around 100% and XIV to lose like 90% of its value, leading the fund to be liquidated. So with a conventional loss like this one, as bad as it is, it's still unrealized. There might be a quick rebound. There's a chance you might make some of your money back. This is the closest thing there is to money completely disappearing. This is a loss here in parentheses. You might be wondering why it's green. It's because when you lose $4 million, the smallest courtesy they can offer you is to make it look green so it doesn't sink in immediately. And so you don't throw yourself off a building. And now, allow your boy to get paid, because this video was made in partnership with the Daily Upside. The Daily Upside is a daily newsletter.
I'm sorry, I gotta skip this.
It's good economics, business, and helps you understand. When I talk thing, well, you know, financial technology venture capital deals are up 20% in the past year. But they make me sound
Hopefully you guys
smart.
are liking this. I'm having a good
like
time
it
so
because
far.
it is- I don't even
You know, I will say that these trades make me feel a little bit better about, you know, those days when the markets are just not doing too good and we're losing a little bit of money. Damn, at least we're not losing our entire net worths in just like a day's worth of time. That's just insane.
I don't even know what the words I'm saying mean, but they make me sound smart. I also like it because it is legitimately the only place I have ever found where you can get financial information without 500 headlines talking about how the global economy is about to collapse. One day they will be right. Until then, I'd rather read this newsletter so I don't have to claw my eyes out. You can subscribe to the Daily Upside by visiting the link in the description. It's 100% free, and you can always unsubscribe if you don't enjoy it. Now, visiting the deep, dark abyss of violent financial losses forces us to beg a very important question. Why? Why would anyone ever fucking do this? Millions of dollars gone. Financial futures.
That's a good question.
Why not just buy an index fund and let your money multiply 22 times over the course of your life?
I'm going to predict why. I think it's just because of greed. People just want to become rich easily without doing any work. And this seems like a dream come true and very possible, but, you know, unfortunately, 99% of people end up like this.
For those of you who haven't been indoctrinated into this community, I'm guessing it's kind of hard to understand. But remember, for every violent loss, there is an equal and opposite gain. It may not be a 1-to-1 ratio, probably closer to 10-to-1 at least. But for every 10 financial futures that evaporate, there's a degenerate lifting himself from the trenches into a new tax bracket. Some of them actually do it intentionally. There's only one I can think of. That's bad. We need to learn about the architecture of financial gains. Gains are more complicated than losses, but also more interesting. Let's dive into this. Now, if you're anybody that's somebody, you're probably going to undergo some massive financial losses at some point. The Spartans used to send their kids out into the wild at a young age. At least that's what happened in 300, I think. Which is exactly what happened in real life, maybe. This is history. This is the modern day equivalent. You leave a boy, you come back a man. I wasn't really going anywhere with that. I just thought it was a funny analogy. Okay, so gains. Here's the thing. You get 10 million monkeys together, and I mean literally monkeys, from a zoo, and tell them to buy options. Some interesting things are going to happen. There are going to be 1,000% gains and 100% losses. Plenty of 100% losses. So what's the likelihood of something like this happening? And yes, that is a 100,000% gain on Tesla calls. Of course. What other than Tesla? Let's actually look at Tesla. I'm guessing some of you might be holding it with the recent rally. What kind of move in the share price would you need to see gains like this? If we look at this 2150 strike call, we can see that the market is anticipating it to have roughly a 1 in 1,000% chance of expiring in the money. Plugging this same call into option profit calculator, we can see what it would be worth at different prices. 1,000% returns. I'm using this to demonstrate that if you get 10 million trading degenerates together, these
11 million people? That's how many people are in the subreddit now? That's crazy. I still remember when it was like 500,000. How much it's grown. Holy wow.
Events become far more reasonable. Crazy things are going to happen purely out of random chance and not necessarily their trading ability. As if that wasn't, for whatever reason, was not obvious. Fuck, if you have 10 million people, it's more likely than not that one of them is a serial killer. I mean, looking at some of these losses, I wouldn't be surprised if this is some kind of serial killer origin story. I wouldn't hold that against them. Okay, 6,000% returns in a day. Wait, no, 6,500% returns. It's easy to just forget that extra 500% until you realize that 500% alone is 5xing your money. The Trivia Tribe bought Roku puts with 1 day until expiration. The next day, Roku's stock happened to get destroyed. So casually 65xing your money in a day. In 99% of cases, if you make a return like this in one day, it was entirely due to luck. Why? Because if anyone had any idea the stock was going to move in a big way, Roku's implied volatility would have increased, causing this percentage gain to be much smaller.
Yeah, that's the thing. This is straight up gambling. If you're making a bet on a 1 day notice, like on a 1 day frame, like if anybody had access to knowing exactly what's going to happen the next day, you could easily make $1 billion with that kind of information. So this is why this is just straight up gambling. Nobody knows anything. So yeah, I mean, that's just kind of how it is.
Despite that, an absolutely insane return. But it doesn't end there, because the Trivia Tribe proceeded to dump the $50,000 into SPY puts, expiring in 1 day. Needless to say, it somehow worked. Once again, you get 10 million people together, some of them will do this. Some of them will turn $700 into $100,000 in 2 days. Is it representative of the entire group? I think we know the answer. This is biotech for you. This comment sums it up better than I ever could. Biotech stocks, for those of you who may not know, are home to some of the most powerful catalysts in the entire stock market. If a company is manufacturing new drugs, a discovery could 10x the value of the business overnight. Because of this, biotech tends to be a ripe opportunity for the kind of degenerate risk-taking you might see on Wall Street bets. In this scenario, Novocure jumped 50% in a day on an announcement that the trial duration would be reduced. Could you ever do this or predict these events with any kind of consistency? The catalysts themselves? Probably not. Only 9.6% of drugs entering phase 1 clinical trials will end up reaching the market. You can never be sure at what point good or bad news may occur. However, I've heard that the bigger opportunity in biotech lies with how you play a potential overreaction to good news. Using Novocure as an example, the stock is down 45% since this massive spike. Good news in the case of biotech isn't enough to create any substantial long-term value. It just means that there's a higher chance the company will be worth something in the future. Hitting a lottery ticket like this one is possible, but highly improbable. That doesn't mean I'll stop trying, because it is fun. 1000% gains
That's a good summary.
Me, personally, I like to see trades with real intent, a prediction that actually worked. Find 10 million people buying lottery tickets, and some of them are going to pay out big. Making a prediction that works as you anticipated is a different story. This trade idea was fairly simple.
That guy's a legend.
In December of 2017, Congress passed a bill cutting corporate taxes. The last time taxes had been cut this severely was in 1987. The idea is that this is what caused the S&P to perform very well in January of 1987. With that in mind, this degenerate bought $100,000 worth of out-of-the-money calls, anticipating that past performance would be indicative of future results. A strategy that always works. As it turned out, he was right. In January, the market had its best month in the past 2 decades. 25xing his account to lock in $2.5 million in realized gains before the market sold off. Most of you are probably thinking, well, if the corporate tax cuts were public information, wouldn't they be fully priced into the options market? And how can we accurately draw causation between the tax cuts and the market's rally in 1987? We can't. However, Steve makes it clear in his post that the trade wasn't based on a certainty that the present would unfold like the past. It was based on the idea that the options market was significantly mispricing the possibility that it could happen. A great trade. From biotech lottery tickets to fund liquidation, you've now seen the highest highs and the lowest lows of internet finance. How does it feel? All of this shows that the best strategy for the average investor is to consistently put money into an index fund. Did I say index fund? I meant inverse volatility fund. That way you can make gains like this.
Wow, that is a great video. I gotta give this guy a shout out. This guy just makes insane content. I love this dude's content, and it's very inspiring. So so hopefully some of you guys are inspired by this. Hopefully it makes you feel a little bit better about your losses. And it just goes to show, you know, like, this is all in good fun. Of course, a lot of people are losing a ton of money, but ultimately it's their responsibility, it's their money. And when it comes to this subreddit, it really is all in good fun. And like you mentioned, for every, you know, if you get 10 million people in a group buying lottery tickets, chances are a few of them will probably hit pretty big, but let's be honest, the majority will not. So this is why I wanted to react to this video as well. I wanted to show you guys, you know, the reality of these things. It's funny, it's good to laugh on, but of course I would never want you guys to, you know, suffer some tremendous life altering losses like that. So just make sure you're playing it safe when it comes to investing. I'm definitely playing it relatively safe, even though I like investing in crypto, and you could argue crypto isn't very safe. I still think I'm a pretty safe investor when it comes down to it. So hopefully you guys enjoyed this, and I'll see you in my next video. Peace.